Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 6 a.m. Eastern Standard Time, June the 2nd. Let's go to some headlines first. We have the markets that are moving up higher, and by and large, I think that it's, being driven by what's been driving it since the pandemic began, and that's or the bottom of the pandemic. Now it's the Federal Reserve, and it's not going away anytime soon. If anything, it's going to get even more aggressive. So to some headlines. Overnight, in second horrific incident, NYPD officer launched into air by hit-and-run driver. The left would say this is wonderful. This is justice. It's absolute insanity. And at some point in time, these governors and this horrible, horrible, horrible New York City mayor, de Blasio, they're just going to have to firm up here. Hey, good morning, NY. Pat, 6 a.m. the new norm. Not when the gyms open up, buddy. I got to get back to the gym. I'm up 9 pounds. I feel horrible. I really do. I got to get back to the gym. They got to open this place up. The next headline up. Looting breaks out in L.A., NYC as Trump threatens to call in thousands of heavily armed soldiers. It's about time. I watched him last night, and frankly, I believe that his comments last night was the beginning of reform here, because it finally put a little bit of backbone behind the average person, the average citizen, and they're coming out to the island. Now, they were out and trying to go out to the Hamptons yesterday. They were in a couple of towns away from me. I had to sit down with my daughter, and I'll tell you, I'll be looking at the gun stocks, not only as an investor but as a purchaser, a consumer. And who I feel really horrible for, who they're trying to villainize, are these people that have to plow through these thugs, these Antifa scum, as they try to avoid just simply getting dragged out of their car because they're going about their business and not wanting to get killed. How dare they? How dare they? On the positive note, virus no longer exists in Italy. Top Italian doctor sees COVID potency plunge. This is really good news. Italy got hit so hard. I think this is coming near us pretty soon. And if we don't see a surge after all these moronic idiots are out there rioting, then I think that we have seen the worst of this. And when I say the moronic idiots, I mean these Antifa scum and those simpletons that are out there that initially begin to protest. Then when Antifa starts acting up, don't have the brains to walk away and say this is wrong. Now, there are certain people out there that have certainly stood up to the Antifa thugs, and God bless them. And they were protesters, and they're not armed. Hey, Tommy, good morning. You shopping for a gun? Pat, I'm sure you guys have guns anyway. You're a hunter, right? Chuck, good morning. Good afternoon. Where are you at, Chuck? All right, let's go to economic data that's coming out today. We have the NFIB Small Business Index. That's an optimism index, and that'll be interesting. You've had the country opening up. I can't imagine that these riots have helped optimism at all. Job openings at 6 a.m. Actually, the NFIB number should be out already. The jobs data, 10 a.m. Wholesale inventories. Are we seeing a build in inventories? Tomorrow, inflation at the consumer level, the CPI. The Fed's going to announce tomorrow, folks. Actually, this is the wrong data. I'm sorry. I'm next week. I was wondering, why am I not seeing the right data? I went over this the other day. All right, so today, motor vehicle sales plunged. I know that already. Wednesday, ADP number. That's what I was expecting to see for Wednesday. And then, of course, you get the Pimp Mac Daddy of them all on Friday, and that is non-farm payrolls. And I can't skip over initial jobless claims to Thursday. Usually I would have up until about 2 months ago. Chuck's still asleep? Yeah, me too. Danny, buy golden guns. Tell me that's not a shirt. I may steal that. That's pretty good. Okay. Let's take a look at the pre-market activity. So my phone was popping off earlier with text messages. Pat was one of them. Understandably, inquisitive about, here's the S&P 500, inquisitive about the spike up in the markets. And here we are yet again, now a new weekly high, folks. This morning, we're up 0.61% or little shy of 19 points on the E-minis, the S&P E-minis. And I think that we're going higher. Now, I went over with members last night a divergence on the VIX. So members, if you're watching this, you haven't watched Market Wrap last night, please go check it out. Scroll forward to the VIX. There is a daily divergence that's concerning after a weekly doji star formation last week. So the VIX may be sending us signals. So please go check it out. Because we have a lot of long positions on right now. And we're probably going to be looking to raise stops and move to cash if we see continued signs of strength in the VIX and any indicators in the market that we may be nearing a top. What might that look like? Could look like a strong open, a close off the highs of the day, or at worst, a bearish key reversal, several of them, or an outside reversal day, or we move up higher, up and into resistance on light volume. The market could send you signals any number of ways. So as we begin to see them build up, we'll be taking profits off the table and going to cash. But we won't be doing it all at one shot. We'll be scaling out. The Russell, up over a percentage point. The Russell did really well yesterday, too. But it, too, closed off the highs of the day yesterday. And this is what I mean by what we're looking for in terms of topping action. Not that it was a severe topping action on the Russell yesterday. There was a lot of indecision yesterday. So here was the Russell yesterday. Here's what they did. And I'll talk about this for a moment here. My chart's gone. I have to redraw it. So bear with me. I'll give you an example of what we spoke about last night. So here is the Russell. We were in an uptrend. We remain in an uptrend. Let's get rid of this, as it's now archaic. All right. Now, here on the 28th, we had an outside reversal day. The 29th on Friday, we closed down below the lower band of support. Now we're trying to limp back up. And yesterday, now it's hard to see. I got to take the annotation off. Yesterday, they popped it back up higher. I'm going to move this downward. And you saw a topping tail at resistance, which in and of itself is no reason to go shorting the market or anything like that. We popped up higher, sold it off the highs of the day. We still closed up just shy of a percentage point. Volume dropped off dramatically. All right, so I don't want to see the IWM continue to limp up higher, up and into a ton of resistance above, continuing to flash topping action like this on ever declining up volume. To me, that spells trouble. Back to the pre-market activity. So that's what I mean when I'm looking for when I say the market sends you signals. Now, the Russell is looking good here, I have to say. 4-hour chart. And we have broken out overnight, in the morning, I should say. Here's our upper band of resistance. We're firmly above it now. So, as the day begins, we can't judge how we're going to close out the week or the day by this chart. But as we proceed into the day, we're on firm footing. So, the bulls firmly in control here this morning. What else do we want to talk about? Let's take a look at the NASDAQ 100. And they are ticking up higher, spot 7%, nearly 67 points. And the path of least resistance is clear here. Here's your support level. We're probably heading up to this resistance level here at 97.15 on the E-mini NASDAQ 100. So we have more upside potential here, folks. Taking a look at I'm taking a look at some comments right now. Chuck, Bob, your inclination was right on Yang. Glad I got stopped out. Yeah, Chuck. I mean, you know, Yang, for those who are not familiar, Yang puts you short of China. And where we closed out yesterday was at recent lows. You know, if they pop it up higher today, maybe it's a time to revisit and add more to the position. I still have a small position, but if we break down to new lows and we close there, I'm going to stop out. I'm not going to fight it, you know, because I think it's clear that after the election, there's going to be more volatility in this market than you can shake a stick at, and you could point the finger of blame at the trade war. That's going to really heat up yet again. Pat, you got it. I'll go with space. NY Jets, AUMN. Okay. So, yeah, Chuck, if they pop it up higher, we hold support, then we can look to add if it gaps down. So we stop out. We revisit it in the future. The key is stay small with that, especially with that ETF. And Keep a tight stop. There's no shame in taking losses. And that's the problem with a lot. I get a lot of inquiries by new investors, and they're worried about taking a loss. And it's like, dude, just stay small, tighten up the stops. There's no shame in it. It's part of the business. Silver. Looking really good here. Now, I will want to go through a chart of bonds, because bonds have gapped up, or yields have gapped up yet again this week. And that means that yields are attempting to move higher again. But typically, as we've seen these past several weeks, the Federal Reserve has come in and beaten the tar out of the bond vigilantes in the back half of the week. So we'll see if that continues, or do we have a game changer? So we have a very tight consolidation here on silver, and it's kind of skewing RSI a little bit here. RSI appears to be putting in lower highs, lower lows, but that's because we're consolidating on price. So I wouldn't read too much into it. If we were breaking out to new higher highs on silver and RSI was diverging, putting in lower highs, then I'd say, whoa, something wrong here. But that's not really the case. All right, we're satisfied with that. So I'm looking for a breakout here on silver. Let's check out gold. Gold. Under a wee bit of pressure here. Yeah. So I don't like to see breakouts and then failures. So we're clearly struggling here on gold. Let's update this. I'm going to start fresh. So we're looking to build on our gold mining trade. But we only want to do so if gold is validating our decision to get long. So we'll be looking for a breakout on gold above the 1760 mark and watching for a breakdown below this, what's the low here, this bar? That low is 1744. We'll keep it a little bit loose. Yeah, this makes sense. I'm going to create an alert here. Okay. All right. So that's gold. Well, ideally, we're going to get a breakout, but I'm concerned about a little bit of lethargic trade here, and we'll watch for a breakdown. This is just our cautionary note that hey, listen, be careful if that alert fires off. Look to get a bit defensive. Let's go take a look at bonds really quick, because bonds matter, as does the dollar. The dollar, new weekly low. Here's a 10-year note. It is weak again this morning. That means yields are moving up higher. And in the short term, that is bearish for precious metals. Longer term, as inflation rises, it's not going to matter. But in the short term, it does matter. Let's not ignore that. The dollar, wow. So we were in a trading channel since late March, and that is now history. We have broken down. Thank you, Federal Reserve, for the dilution of our buying power. And this is why people are so pissed, and they don't know why. You have the dollar tanking. Not that the average American is paying attention to it, but what does that influence? Pretty much everything. Oil is up higher today, moving up higher. Why? It's priced in dollars. Home heating oil is up higher. Why? It's priced in dollars. So these are all the inflationary needles that are just poking people, and it's going to get worse. Food prices, here's corn, moving up higher. And we've been talking about this agriculture trade for a while now. Here's our little egg company that took it on the chin yesterday. All right, I digress. Let's take a look at nat gas. Nat gas is lower. Okay. All right, let's do some chart requests. I have a message in here that YouTube just held for review from George. I got to read it first before I show or hide it. The Fed and Trump have put $7 trillion on the people. That's all good. F you. I don't know why you'd say F me. I'm not happy about it. So I'm not going to approve that comment. I'm willing to read it, but I run the risk of this not being a family-friendly show and YouTube demonetizing me, and it's the last thing I need right now. So, George, forgive me. I can't approve your comment. But I think you're completely off base with your portrayal of my opinions about the Federal Reserve. So you ought to really listen to me a little bit more before you start cursing at me. Okay. But I do appreciate the comment, I guess. Let's do some chart requests. All right. Chuck, I'm gonna kick off with you since I already have this chart up. This is a chart of the Yang. And let's go to a weekly chart. Here's what I'm looking at. Here's what I mentioned earlier, that you can see I have an alert set. Actually, it fired off yesterday. We bounced right off of the support level. So this is what we're looking for hold. This is what we're looking to hold, 34.69 on Yang. So ideally, we see a pop up this morning. If not, then if we appear poised to close back down below the support level, putting in new lower lows, then we take a small loss and move to the sidelines, live to play another day. We'll come back after the election. Or if the chart sets up, we'll re-enter at a lower price. So no pressure on us. Let's go to a daily chart really quick. And again, folks, this puts you short of China. Leveraged ETF, though. Very, very volatile. All right, so the daily chart obviously looks the same as the weekly chart because you only have 1 day in the books. Let's drill down, see how we might open up the day. 30-minute chart. Not a wonderful close. I mean, we closed off the lows of the session, but again, bearish reversal bars. They tried to rally it a few times. It was rejected. Stokes a little bit oversold here, quote unquote. RSI, same deal here, but it's a 30-minute chart, very volatile. So, you know, right now, if I had to hazard a guess, given the fact that the markets are up and the close that we saw yesterday, in all probability, we're going to make a new lower low. In fact, let's go to the pre-market, see what's going on here. Yep, new lower low. So no great shock. All right, moving on. Pat, space. All right. Let's go high level first. Forget about monthly chart. Weekly chart. Okay. One more. All right. So, weekly chart, we popped up higher yesterday. We did close higher, but we closed off the highs of the session. In the pre-market yesterday, we hit just either 20 bucks or just shy of 20 bucks per share, but it didn't follow through to the regular hours session. So what we're seeing here on SPCE, clearly resistance. So I think that for us, and we are currently long of SPCE, we have a position for disclosure purposes. For us to want to add more, we would want to see a pullback to support to either, let's call it 1770 down to 1685. Honestly, if we broke it back down below the support level, I'd have to book profits on the trade and look to get into lower prices. But ideally, we continue higher, close above the 1885 mark, where historical volume is a lot lower than where we're trading at current, and we could possibly add more on a close above that level. Stokes are hooking up higher on a weekly basis. RSI, a little bit lackluster, to be honest. But that's because we closed off the highs of the session yesterday. Remember, this is a reflection on a weekly chart of one trading day. This is going to change dramatically today. Daily chart. All right, so here's our gap up higher. Ugh, I drew that like a 2-year-old. That's better, Bobby. Okay, so what we may get here, and this would be an interesting point at which we may want to nibble a bit. And given yesterday's price action, I'm not going to be the least bit surprised to see this happen. All right, so we have this set. We're good to go here. Here's our alert. right? So what we're looking for, the strategy, is if we pull back, tap what was resistance here on the 27th, not so much here on the 28th, but here again on the 29th, should now act as support if this is a healthy stock. If it fails to hold it and it breaks down below it, then we want nothing to do with it. That would be a breakout point failure. But if it does tap it, holds it, rallies off of it, well then, that's the market sending us a signal. Folks, just before I forget, and I'm going to blame my dedicated viewers for not reminding me as much today, to smash that like button, please, if you could. Subscribe to the channel. I would truly appreciate it. Let's check out how we might open up today. Let's go to a 30-minute chart. Yeah, it's looking good here. We're consolidating. In fact, let's do this. Let's go back to the daily chart for a moment. I want to I could change this from appearing on a daily time frame to all time frames, and that's what I want. So that way I see it on the intraday chart as well. Let's go back to that 30-minute chart so I can superimpose, and there it is right here. So we have a few support levels below, but ideally we tap this one down here and rally off of it. And this is a very volatile stock. It easily happen. But we will look for a rally as well. And we'll just keep this active for a couple of days. So we're either going to wait for a pullback, retest, or look for a breakout, and then possibly look to add more. All right, AUMN. Do. Good close yesterday. We'll come back to this. And we have a breakout. Very, 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 very nice. Very nice. So we have a breakout on a monthly basis. Obviously, we're only in the second trading day, which hasn't even opened up yet. So a lot can happen here. But this is a significant breakout. We've broken out on Stokes. RSI as well. Weekly chart. Congratulations on the trade, NY. So you're approaching 100% on this trade. It's looking good. On a weekly basis, we're looking strong. Not a ton of historical volume above. Look how long it took to get through this price point with all this volume here. Now you're through it. That's good stuff. Now the only concern I would have, it's not a major concern, is that you could see it yesterday, a little bit of resistance here, but we did close above it on a daily basis. Watch for a retest. All right. So if you're looking to add, which I doubt, but if you're looking to add, watch for a pullback and a retest of the support level. And I think we're going to get that. And if it holds, it's a great place to open or add and then put a stop loss right below it. If we fail to hold the support level, then you stop out, very small loss. And I believe that is it for this morning, folks. Listen, everybody have a very, very profitable trading day, and I will talk to you soon. Be well.